Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the top market events that are currently moving prices, with a key focus on the major currency pairs, gold, oil, major stock market indices. And once we cover these, hopefully everyone will trade from an informed perspective. So as always, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So on the top highlight news in the markets this morning is one. Yesterday we saw US CPI, which is a measure of US inflation, coming in slower than expected at 2.8%, down from 2.9%. Of course, the previous reading was 3%. So in this case, we are seeing a gradual decrease in US inflation, which raised hopes that the market panic would have some relief. So over the past couple of days, we have seen a lot of investors panicking due to US President Trump's tariffs. And as a result, we have seen the SP 500, the NASDAQ, the Dow Jones, all going down, as well as European equities. The DAX has been really going down, same as the Nikkei 225 index in Japan. So this market panic was basically focused on President Trump's tariffs. And now seeing inflation subsiding and going towards the Fed's target, there was hopes that the Fed would go for a rate hike, but instead, the Fed would go for a rate cut. But then instead, after the announcement of the CPI, we heard Trump addressing the markets yet again, where he threatened to basically increase tariffs on the EU as well as Mexico, and this led to a more complicated path. So let's look at one of the articles on the updates on this. So tariff wars where CPI cheer fades. So look at the day ahead in European and global markets from Kevin Buckland. Wall Street's mild bounce on the back of a tame CPI reading did not provide much impetus for Asian markets, leaving European investors with little cause for optimism. So one problem is that the inflation data, while offering some relief from the run of discouraging indicators lately, won't translate directly into a lower PCE price index, and that's the Fed's preferred gauge of price pressures because the cooling came mostly in services sector. So another concern is that February's data doesn't fully capture the impact of Donald Trump's wave of tariffs. And ultimately, the primary worry for markets is not inflation, but growth. On the subject of tariffs, Europe finds itself directly in Trump's sights after the EU's threat of countermeasures was met by a warning of reciprocal duties from the United States. It remains to be seen whether Trump's approach to Europe mirrors the ramp-up and reprieve strategy used for Canada and Mexico and the tax and then tax again model applied to China. So the good news is that according to Germany's Kiel Institute, only a small fraction of targeted products from the EU are exported to the United States. So EU is a major buyer of US drugs, chemicals, as well as paint. So of course, we'll be expecting the EU to be taking a hit as a result of more tariffs from Trump. So as you join, kindly say hi on the live comment section. And of course, if you have any questions relating to the presentation, feel free to type them in the comment section. As we continue, I'll be looking to answer them towards the end of the presentation. So kindly give me a sec here. So this morning, I did a couple of updates on X, so I'll be sharing them with you guys. So one of them is that Trump eyes Michelle Baumann for Fed oversight role, signaling regulatory shift. So this does not mean an outright replacement of Jerome Powell. Jerome Powell will still continue as the Fed chair until, I believe, May 2026. So here we are talking about the deputy governor. So the Trump administration is pushing for a significant shift in banking regulation, with plans to nominate Michelle Bowman as the Federal Reserve's top bank supervisor. So this move aligns with a broader strategy to ease restrictions on lenders and revamp financial oversight policies. So we all know about how several community banks collapsed last year and the previous year in the US, and this is mainly being blamed on banking regulatory policies, and Trump is looking to fix this. So Trump is expected to name Michelle Bowman as the Fed's vice chair for supervision, overseeing major US banks. So a recent executive order strengthens the administration's role in shaping the Fed's regulatory approach, while monetary policy remains independent. The administration seeks to reduce regulatory constraints on banks, rolling back basically post-2008 financial crisis rules. Treasury Secretary Scott Bessent criticized current regulations as backward-looking and called for better coordination between financial oversight agencies. Bessent emphasized shifting from rigid compliance checks to a system that prioritizes managing material risks. Bank stocks could see short-term gains amid expectations of deregulation. Reduced oversight may increase lending activity and boost economic growth, but could also raise concerns about systemic risks. So that's the update. And of course, we'll be expecting to see how banking stocks react to this information as the market opens later in the day. So on other news, the Bank of Japan signals balance sheet reduction and potential rate hike. So the Bank of Japan Governor Kazuo Ueda reaffirmed plans to shrink the central bank's too big balance sheet, signaling a shift away from prolonged monetary stimulus. So as you might know, in recent weeks, the Bank of Japan basically declared victory on deflation or disinflation. So this is a problem that the Bank of Japan has been facing over the last 2 decades. So out of that, they have kept interest rates largely in the negative, trying to boost the economy. And in between, they have been pumping more and more yens into the economy, trying to support wage growth and see inflation on the rise again. So last year, they saw inflation remaining significantly higher than target for over a year. And as a result, they decided that they have won the battle against deflation. And as at now, we have seen the Bank of Japan hiking interest rates, moving them from negative 0.1% all the way up to 0.5%. So in the next meeting, there has been a lot of speculation that the Bank of Japan will be hiking rates. But what we are seeing is an eventual pause, but with a promise to potentially hike in May. So Ueda expects import cost-driven inflation to moderate while steady wage growth supports real wages and spending. So this has been a major problem, especially on the energy sector, where Japan imports a majority of its energy. So if energy prices are moving up, then that becomes a problem for the Japanese economy. However, judging from what we are seeing in the oil markets, Brent oil moved from $81 in mid-January, and now we are looking at it trading at $70 per barrel, meaning that oil prices are moving down, and now import cost is not that much of a burden. However, if you also look at the currencies, you notice that the Japanese yen has also been strengthening against the US dollar. So import cost-driven inflation is moderate. It's not expected to be that much. So the Bank of Japan is set to hold interest rates steady in next week's meeting, but may consider hikes as soon as May, depending on domestic inflation trends and US trade policy uncertainties following Trump's tariff threats. So reduction in stimulus and potential rate hikes could impact the Japanese equities lower. So for the Nikkei 225 index, we might be seeing more downside pressure. Bond yields in Japan are already at a high that was last seen in 2008, and they could continue rising with the promise of more rate hikes. Of course, for the yen, we have seen it recovering against major currencies. So far, it's the biggest mover against the dollar among the top currencies. So the reverse carry trade continues. And by reverse carry trade, as we all know, it's basically the practice where a lot of investors and banks had borrowed a lot of yen to invest in Western markets, especially the USA. And now that the yen is strengthening, their loans are becoming very expensive. So they have to unwind those loans unless they want to face further losses. So as a result, we are seeing a lot of investors repaying back their loans and basically strengthening the yen again. So this year, if you check the performance of the yen, you notice it has been the strongest gainer compared to other currencies. So let's try and check that. So since the year started, I'll be sharing the tab shortly. You'll notice that the Japanese yen has gained by 6.45% against the dollar. The euro has also been good, up 5.04% against the dollar. The pound is up 3.53% against the dollar since the year started. Swiss franc is up 3%, New Zealand dollar 2%, and Australian dollar 1.74%, with the Canadian dollar being the weakest currency in the market right now. Of course, we know why. A mix of tariffs against Canada and Brent oil prices going really down basically means that we see weakness in the Canadian dollar. So month to date, that is since the month of March started, the euro has been the strongest currency, having gained 4.72% against the dollar, whereas the Canadian dollar has made the smallest gains. So as for today, or this morning, we have seen out of changes in currencies, with the Japanese yen being the only currency that has gained against the US dollar, or other currencies have been losing, with the Australian dollar having lost the most, down 0.42% against the US dollar. So let's look at other market updates that I may have missed. So there is a recent poll in America trying to gather the popularity of Trump's policies. So many Americans see Trump's actions on economy as too erratic, poll finds. So 70% of Americans believe tariffs will push prices higher, and this has been a consensus also from the business side, from what we saw in the Beige Book, meaning that there is an overall expectation that prices might continue rising. And we know that if people believe prices will continue rising, then it becomes a self-fulfilling prophecy as they rush to buy goods before prices rise. So this tends to have an overall impact of raising inflation. So a majority of Americans believe President Donald Trump is being too erratic in his moves to shake up the US economy, as his imposition of tariffs against some of the nation's top trading partners Hamas stock markets. So some 57% of respondents, including 1 in 3 Republicans, say the president's policies have been unsteady as his efforts to tax imports have set off a global trade war, according to the 2-day poll that closed on Wednesday. So let's look at the poll. This is the outcome of the poll. So all adults, 57%, agree that the Trump's moves shake up the economy are too erratic, while 32% are in support. So if you divide these in Republicans versus Democrats, you'll notice that a majority of Republicans are in support, 60% of them, whereas a majority of Democrats are not in support of Trump's policies. So the major news currently moving the markets today is that Trump threatens further tariffs as EU, Canada retaliate for those already in place. So Washington, Donald Trump threatened on Wednesday to escalate a global trade war with further tariffs on European Union goods, as major US trading partners said they would retaliate for trade barriers already erected by the US president. So just hours after Trump's 25% duties on all US steel and aluminum imports took effect, Trump said he would impose additional penalties if the EU follows through with its plan to enact counter tariffs on some US goods next month. Whatever they charge us, we are charging them, Trump told reporters at the White House. So Trump's hyperfocus on tariffs has rattled investor, consumer, and business confidence and raised recession fears. He has also frayed relations with Canada, a close ally and major trading partner, by repeatedly threatening to annex their neighboring country. Canada's the biggest foreign supplier of steel and aluminum to the United States announced 25% retaliatory tariffs on those metals, along with computers, sports equipment, and other products worth $20 billion in total. Canada has already imposed tariffs worth a similar amount on US goods in response to broader tariffs by Trump. So clearly, the more we see these to and fro between Trump and other economies, the more the market continues to panic, and the more we continue seeing a big sell-off in equities and rotation to safe haven assets. And this includes gold, and we have seen gold being on the rise since the year started. So outside of that, of course, we're expecting the G7 countries to be meeting today in Canada. So the group of 7 ministers from Britain, Canada, France, Germany, Italy, and Japan, and the United States, along with the EU, meet in the remote tourist town of Malbe, nestled in the Quebec Hills for 2 days of meetings that in the past have broadly been consensual on the issues they face. So all the G7 countries are basically meeting in Canada to basically discuss the impact of tariffs and how to respond to this, basically trying to find a neutral ground. So I'm trying to see if there's any more updates I may have missed. All right. So if there's no more updates, then we go back to the economic calendar. So from the economic calendar, you don't have any major news coming up for the day, except for 3:30 p.m. Impacting the US dollar. So after they saw the CPI data yesterday, today the focus will be on producer price index, which is a forward measure of CPI. It basically measures the prices charged on producers, and it's a forward indicator of oncoming inflation. So as of this afternoon, we'll be expecting that February producer prices increased by 0.3%, slightly lower than the previous increase of 0.4%. So as for core producer price index, we expect a 0.3% increase in February, similar to what happened in January. So a much weaker PPI, similar to what happened yesterday, would boost the stock markets, and we see some form of recovery. But then if we see a strong PPI, which would be the exact opposite from what we saw yesterday, then we could be seeing more panic selling in the markets. So as for the unemployment claims, we are expecting an uptick from 221 to 226K, which would indicate a weakness in the labor market. And as a result, it would provide some form of relief in the US equities markets. So that being said, I believe it's time we jump straight to some technical analysis to try to understand where the markets might be headed next. And then hopefully everyone will have a successful trading day, having traded from an informed perspective. So let's get on with it. Trying to load some charts here. So for those who are new, this is basically referred to as the MetaTrader 5 trading platform. It basically shows you the charts for major asset classes. So you're able to trade currencies, indices, stocks, as well as futures, all on the same platform. So it provides you a much clearer view of what to do and how to do it. So let's look at USD JPY, and as you can see from a daily time frame, since the high that we saw recently, and this was the high that we saw on the 10th of January, we have only seen the yen continue gaining against the US dollar. So far, since the year started, you can notice that this has been 7.84% gain by the yen against the dollar before pulling back a bit. So it's still over 7%. And if you go to the H4, you'd notice that this has been the overall trend. So if I refresh my chart, then you can notice that there is some kind of a trend or channel that is forming on this chart. So if this is the prevailing channel that the market has been following, then we know that overall, when the market gets closer to the upper trend line, there's more selling activity. If it gets closer to the lower trend line, then there's more buying activity. So from the 1 hour chart, this is what we are looking at. And clearly, yesterday and the previous day, we have had the dollar regaining some momentum against the yen. But then in the afternoon yesterday, we saw sellers coming right back in and pushing prices much lower. And this morning has been the same story. So as a result, there's an overall expectation that we continue seeing the yen gaining more momentum against the dollar. Of course, if you look at the New York session low, this was on Tuesday. Then this could be a potential target for today's price action as we continue seeing the yen gaining more momentum against the US dollar. So with that, if you look at the US dollar index, there was attempt at recovery. So if you go to the 15 minutes chart, zoom out and look at yesterday's price action, the market opened by moving even higher, pulled back, and then recovered, pulled back in the New York session, and then made some recovery, eventually closing on a positive for the first time in a few days. And now you can see in the early morning session, there was an attempt by the dollar index to move higher. But now as we enter into the London session, you can already see a footprint of sellers coming back in. So the dollar index has been pretty weak. If you look at the recent weeks, it has just been going down from 109, and now we are looking at 103, and perhaps we could be seeing the dollar index going back to 100 levels. So with this much weakness in the dollar index, other currencies have taken advantage and made very strong rallies. So for instance, if you look at the pound USD, very strong rally from the bottom that we saw here. This was the bottom in the 15th of January, and now it's up 6.93%. So clearly, with this strong momentum, we expect this to continue. So a few days ago, we had this triangle pattern with a major breakout happening on Tuesday. So yesterday being Wednesday, and then today, Thursday, we are not seeing much of a change. So it's more of a consolidating market. This market has only been following this path here. And this morning, we are seeing some nice bounce. So the bounce that we are currently experiencing is expected to extend up to the upper trend line. So potentially moving to these areas here. And of course, you can already see that this bounce is playing out strongly at the London market open. So for UK pound, if you look at the 15 minutes chart, we had this pullback playing from yesterday in the afternoon. So nothing much was happening in this chart. So I would say that this market was basically following this path, and now we're on the verge of a break. So the break could be playing out as we speak. So potentially, if the market breaks above this area here, so good likelihood that we rally to yesterday's high. So there's a good chance we could be seeing an extension of the rally and getting to 1.299 price level. So as for AUD/USD, we have seen the Australian dollar make some gains yesterday in the evening, but then this morning, all the gains that we made in the New York session have already been erased, basically setting up for a continuation pattern. So what we are seeing here is a market that was literally trading inside a flag, and then making a breakout, a pullback, and a potential continuation from the current price levels. So there's a good chance that we see the Australian dollar bouncing from this area and perhaps retesting the day's high. So this would be backed on a weak US dollar. So we already covered USDN. Nikkei 225 index has already shaped its pattern. So in this case, we're expecting to see some further downside momentum. So in this case, given the strong bearish momentum, we could be seeing an extension of the current sell-off to around 36,455 as the market remains within pattern after it broke below the 37,722 support area, which had been holding for weeks. So if you notice the number of weeks that this area was acting as support, after the breakout lower, we expect to see some further downside momentum. So as for gold, the bullish momentum continues. So we are on the verge of hitting a new all-time high. So from the forward chart, if you check the most recent all-time high, it was right here at 29.56 or $2,956 per ounce of gold. So from the 1 hour chart, you'll notice the strong momentum that we have seen from Tuesday, Wednesday, and now Thursday. And now we are very close to hitting that target. So of course, in a bullish momentum, you want to buy the pullbacks, and it seems like that is what is currently happening as we continue in this London session. So good chance that by the time we finish the London session, we will be looking at a new all-time high in gold. So Brent oil prices have currently broken to the higher side. So notice how we broke this particular trend line here. Market went up, retested, and is now pushing higher. So as usual, we know that whenever we see such a pattern, we try to look at the pattern's high. So we don't expect much of a rally from Brent oil, but at least at a retest of $71.256 per barrel. So our area projection here on Tuesday that the market would hit resistance and move further back downwards didn't play out as expected, as the pullback was short-lived, and now we are seeing the markets moving higher. So from the forward time frame, we are looking at a potential gap here, where the market literally gapped downside here, and it's looking to close the same gap. So good chance that if we get to the previous high, then we could be seeing the market extending to 71.872 price level. So clearly a good chance of some bullish momentum with eventual positions looking to short. So once we get to those levels, then we should be looking for short selling positions, as the long-term trend in Brent oil prices is still bearish. So we mentioned the strong uptick on a UT 100 here on Tuesday. So on Wednesday, it continued moving higher, but we had issued a disclaimer that we cannot take any bullish sentiment on the Nasdaq unless we see some form of a breakout of this particular trend line. So far, the Nasdaq hasn't broken above this particular trend line, and all we are seeing is more panic selling. So from what we saw yesterday, it was a break of a pattern that we had become accustomed with, and the pattern was that we were seeing more of a sideways momentum in early morning trading, followed by a big sell-off in the London session. So this had happened for a good number of days. Sideways momentum, then big sell-off during the London session. Sideways momentum, then a big sell-off during the London session. Same case here, sideways momentum, then a big sell-off during the London session. And this was more of the pattern that we were trading in the last couple of days. So now we saw a change yesterday with more sideways momentum here, followed by a rally in the London session. And then we had some panic selling as we got into the New York session, a strong bounce, and the market closed up at least 1%. However, after yesterday's CPI, you can see that this morning we have seen the Nasdaq erase the gains and push further back downwards. And now we are at a focal point trying to understand whether the markets will be moving lower or higher. However, there's always a pattern in between a pattern, and in this case, we are basically looking at a sequence of higher highs. And if you look at the last 2 days, you'd also notice that there is a sequence of higher lows. So if we were to connect this low that we saw on Tuesday and push it all the way up, then, then this is what we come up with, which basically implies that the current move or cycle is expected to be going here, and then a potential bounce from this area here, but also a potential breakdown. So it really depends on whether we continue seeing some form of panic here. So the key idea is to be tracking this price action area for a potential entry point. When the market gets there, whether there will be a bounce or a break. So that will be the key idea for trading the Nasdaq later today. So as for the US 30 or the Dow Jones Index, we are seeing a strong bearish momentum. So attempts to move prices higher yesterday were met with a strong rejection of higher prices, a big sell-off in the New York session open, and then today we are seeing the markets gradually moving a bit lower, and we could be seeing a break of yesterday's low. So from a daily time frame, you can already see that these are fully blown stock market sell-off. And clearly, from the most recent high, this is 8.63% correction. So we could be seeing an extension to 10%. So 10% would be somewhere around here. So this would literally mean that the Dow Jones extends the current sell-off to $40,190 per share. So we'll be looking at any form of bullishness as potential entry points for short selling positions. Then for US 500, it's quite a similar thing, but in this case, I'm looking at a range here. So it's a market that is seemingly moving sideways. If you look at yesterday and Tuesday, you notice that this seems to be the key theme here. So this seems to be the support area, this seems to be the resistance area, and currently the market is on a path moving this way, potentially getting to yesterday's low, which was $5,542 per share. So the idea is to be looking for a breakout, especially to the lower side if the panic continues in the market. That would set us up for a short selling position. So from the daily time frame, this is what we are looking at. So since the most recent high, which was an all-time high, the stock market went down 10.09%, indicating that the index is in correction territory. So when we talk about correction territory, this is when an index goes down 10% from its most recent high, but the SP 500 being down 10%, which is the broadest index in the US, then it basically means that the entire stock market can be accepted as to be in correction territory. So the Nasdaq, which is usually a much more volatile index, it's already down about 14.08% before making some recovery. So meaning that the entire market is in correction territory, which basically increases the likelihood of further market sell-off. So Bitcoin made some good recovery after bottoming at 76,644. But given the correlation with equities and what we are seeing here, we had already seen what looks like an inverted head and shoulder pattern. So if this was our first shoulder, and I'll try to illustrate it. That would be our first shoulder. Then we look at the head here. And then the other shoulder. Then we would be basically saying that this is a setup for a reversal and the market is now headed higher. However, the market hasn't broken the upper trend line, which implies that we at least see some further downside momentum. So on the short run, if we don't expect much, then this. But then if we happen to break this, then we could be seeing some further sell-off, basically moving further downwards to around 80,630. So this is a potential move for the day. But overall, with the potential announcement of the Bitcoin reserve in the US, then we could be seeing a strong breakout and a move higher. So the idea is that whenever the market breaks above this, then we are set up for a strong momentum upwards, and that momentum could extend all the way back to above 100,000. So let's be patient, but for intraday trading, it looks more likely that the price will be moving a bit lower for the day. So for New Zealand USD, you can see that the market has pulled back downwards, currently retesting a key level support for the last 3 days. So here we are looking at a potential bounce or even a break, with more likelihood of a weak dollar and the New Zealand dollar making another push higher. So pound yen still giving back some of the gains. Of course, we know that the yen is currently very strong. So clearly we expect more downside momentum. So having seen the swings that we have been experiencing in the pair, clearly the market has attempted to move higher and failed. And now we are seeing a strong pushback. So the real question is, where is the market headed to after hitting that strong resistance? So we have already hit the low of yesterday, which means that we could be going for the New York session low on Tuesday. So potentially extending the bearish momentum to 190.235. So as for European equity indices, the DAX is still moving downwards this morning. So given the new threat of Trump's tariffs, we had this a particular trend line acting as support, and this goes all the way back. Then the trend line moved a bit lower, and here we are looking at potential strike points at this area, this area, this area here. So yesterday attempted to break towards the lower side, and now we are seeing a setup for more bearish momentum. So in this case, clearly we have seen the DAX attempt to move higher, fail yet again, basically implying that here we could be seeing some further downside momentum. And of course, having approached yesterday's low, then Tuesday's low becomes the new target. In this case, from the current price action level, we could be seeing some further panic selling to 22,240. So for the Spanish stock market index, it's really attempting to make a bounce from the current price action level, but indications are that the market is still in a sell-off. So if you look at the most recent high in the current price action level, we are down 4.76%, with the lowest being 5.5%. So 1 hour chart is indicating some form of recovery, but more high chances that the market will keep going down given the threat of Trump's tariffs. So the France 40 stock market index also attempting to move lower. So we had projected that we would see this big sell-off. That was about a week ago. So this played out perfectly. And then this week we have seen the extension and a break of a major support area. So a retest of this particular area and a further drop yesterday. And today, more likelihood that the market continues within that direction. So now, after breaking below that support, could be seeing the market headed for the next support area. And this is 7,833 price action level. So for the EU 50 for the Euro stocks, we already saw the market break a key level support, pull back to retest, and then a form of continuation. So in this case, a clear pattern would mean that the market extends the bearish momentum, with a key target being around the Tuesday's low. So Tuesday's low seems to be a key theme for the day, with the expectation that the market keeps moving further downwards. So as we approach the end of the presentation, if we had to select one chart for the day, I would say gold. Given the uncertainty of Trump's policies, gold hitting a new all-time high above 29.56 could be the strongest idea for the day, in my opinion. I don't know what's your strongest idea for the day. So let's check the comment section for some questions. I'll respond to the questions as we approach the end. So where is that? Good morning, Rono. You can see Derry, Chari, Genius in the house, Matilda and Edwin, Dennis Mwangi and Duko, Wangari, Davis, Teja, Success Lab, Paul Kerry, Joyce Maura, good morning. Clive with the Dawn, Michael, Marcelina, A. Thank you guys for joining. So Euro USD just broke its structure. Will it continue to sell? I don't know. We already did the analysis for Euro USD. This is what we talked about. We are currently in a range and the dollar is still weak. So more likely that we continue seeing euro that is still pretty strong in the markets. So another good question from Wangari Patrick. USD has been weak January. NFP and CPI and Trump's influence have all pressured it further lower. Can we say at the moment we should only be looking to trade it as the weaker currency? Yes, so far we haven't seen any major changes. Yes, there was some form of relief from the CPI data, but we know that the services sector will not be included in the PCE price index. And as a result, we may expect the dollar to continue weakening. So if there's a stronger currency like the yen, the euro, the pound, it makes more sense to pair them against the dollar, including gold against the dollar. So what will move the market more today, PPI or unemployment claims? What if PPI also comes out lower? Does that mean the dollar will have a free fall going forward, or at least for the week? Well, as we have mentioned, the biggest market mover for today is Trump's policies. Trump's threat of tariffs against the EU as well as Canada and Mexico, is becoming more of a threat in the market and more of a concern, leading to more investors reacting to Trump compared to economic data reports. So we have already seen evidence of it with CPI yesterday. We expected that the stock market would have some form of relief and make some form of recovery, but that was already overshadowed since this morning Asian session. We've already seen stocks moving further back downwards. So as a result, the overall expectation is that we continue seeing a market more dominated by Trump's sentiments. So these have already been covered. Gold seems to be the way. So high, are we likely to see a Fed rate cut this month? I would say highly unlikely. Let's try this. So I'm trying to share the Fed Watch tool here. So as per yesterday, chances of a rate cut were 1%. So I don't know if this has changed. So hope it holds. So yes, the chances of a Fed holding rates steady on the next meeting, which is next week, are 97.0%, and the chances of a rate cut are 3.0%. So this basically means that we are likely to see the Fed holding rates steady. So what is the impact of Trump's tariffs on gold? Of course, Trump's tariffs are bringing uncertainty and risk in the markets. So as a result, investors are refraining from investing in high-risk assets. And as a result, they are going for a safe haven asset, and the best in the market right now is gold. So even though the US government adopted a BTC reserves and the crypto conference held by the White House last week, we have seen the crypto market falling freely. What's causing this, imagining the crypto is safe now? So on one side, the meeting that Trump had with major crypto stakeholders had positive results, but they have not yet announced the exact amount that they will be buying for the reserve. So just by saying they are planning to do a reserve is not enough to boost the markets. So at the same time, there's a very strong correlation between the crypto market and US equity indices. So when you see US equity indices on a free fall, then the panic is also felt in crypto, even at a much larger scale. So the panic is basically a spread from what is being experienced in the equities markets. So we'll only be seeing a pump when we eventually see the announcement of what coins will be included in the reserve. So the pump may not be for the overall market, but for the individual cryptocurrencies that will be part of the reserve. So, morning, Eric Wanderi. Thank you for joining. Unfortunately, you have come at the rear end of our presentation today. So the session is live. It's recorded, so you can always rewind and rewatch the session. So thank you everyone for joining. Remember, we have a new episode of the Bullish Banter podcast. Make sure to check it out on FX Pesa YouTube. So if you're just beginning your trading journey, then you should be able to find a free course called Novice to Pro on FX Pesa YouTube channel. And if you're looking to register for a trading account, kindly check the links in the description below for a registration link. Register for an account, start practicing, and start growing that skill. So that's it at the end of the session today. Enjoy the rest of your trading day. I appreciate you for your feedback, sharing, liking, and subscribing to the channel. I hope you have a wonderful day.